All right, let's dive in. Today, we are looking past the classic investment playbook, the usual mix of stocks and bonds. We're going to explore the world of alternatives, which honestly might just be the future of how we invest. So, think about it. For decades, the go-to strategy was the 60-40 portfolio. 60% in stocks, 40% in bonds. It was the gold standard. But the world is changing, and fast. So the big question now is that old model really built for what's coming next? And this slide, it lays out the shift perfectly. On the left, you've got the stuff we all know, public stocks and bonds. But on the right, you have this huge new territory just called alternatives. And let me tell you, this is where some of the most fascinating action in the market is happening right now. Okay, so what in the world are alts anyway? Let's get a really clear definition down because a lot of people are starting to see this category as the essential third piece, or the third sleeve, of any modern portfolio. At its heart, the definition is pretty simple. If it's not a stock you can buy on the New York Stock Exchange, or a government bond, or just plain old cash, well, it probably falls into this big bucket of alternative investments. It's a massive and really diverse world. And when I say diverse, I mean it. We're talking about everything from private credit, where you're basically acting like the bank and lending money directly to companies, to private equity, which is all about getting in on the next big thing before it goes public. Then you have real assets, the actual bridge you drive across, or the data centers that power our phones. And then there's this really cool area we're going to talk about called secondaries. But, and this is a big but, there's always a catch, right? These aren't like stocks you can just buy and sell in a second. The main trade-offs are, first, they're usually less liquid. That means your money could be tied up for years. They can also be way more complex to figure out, and you absolutely have to be in it for the long haul. So now that we've got the basics covered, let's get to the really good stuff. What is actually going on in the world of alts today? We're going to look at the biggest trends that are shaping this market as we head towards 2026. First in the list, private credit. This has been explosive. As big banks have started to step back from some kinds of lending, thanks to new regulations, these private lenders have jumped in to fill that void. They've become an absolutely critical source of funding for all kinds of businesses. So you've got this perfect storm, right? Banks are pulling back, but the demand for loans is still super high, especially from private equity sponsors who need that cash to make their deals happen. Private credit is the bridge. But here's the thing. As the market gets bigger, it's not like every loan is a bullseye. That means being super selective about where you put your money is more important than ever. Now, all that money pouring into private markets leads us right into our second trend, which has a kind of funny name, the Great Recycling, or as the pros call it, secondaries. The easiest way to think about it is like a marketplace for pre-owned private investments. Yeah, this quote just nails it. The secondaries market is an essential liquidity valve. You see, there's this huge backlog of older private equity investments, and this market lets the original investors sell their stakes, get their cash out, and then recycle it into new deals. It's so important that 2025 was a record-breaking year for this, and it looks like it's not slowing down. Okay, so that recycling is happening at the big money institutional level, but what about everybody else? Well, that brings us to trend number 3, and this one could be a real game changer, the retailization of alts. For so long, this stuff was only for the giant pension funds and endowments, but that's all starting to change. We're seeing brand new types of funds pop up that are designed to open the doors for more people. They're often called semi-liquid funds, and they give investors a way to get in and, just as importantly, get out more easily than in the past. It's a huge shift. But of course, opening those doors also means adding a whole new set of rules and regulations to protect everyone involved. So, if making alts easier to buy is one innovation, our next trend takes that idea into the future. I'm talking about the tokenization of real-world assets. The basic idea is you create a digital token on a blockchain that represents ownership in a real physical thing, like an office building or a piece of art. But before we all get too excited, let's pump the brakes a little. The key word here is slowly. This is moving from just an idea to actual pilot programs, which is cool. But there are still some major legal and practical hurdles to get over before it's a mainstream thing. So definitely one to watch, but maybe don't hold your breath. So while tokenization is still a bit out there, our fifth trend brings us right back down to earth, to things we can literally see and touch. Real assets, like infrastructure, are catching a major tailwind from some of the biggest global shifts happening right now. What I love about this is how it connects investing directly to the big stories in the news. Think about it, the massive push for clean energy, our endless need for more data centers and cell towers, and the big move to bring supply chains back home. All of these trends require building real stuff, creating huge long-term investment opportunities. And well, all that demand for huge real-world projects flows right into our final trend. It's all about how the market itself is changing. As the world of alternatives has grown up, the big players are getting even bigger. What we're seeing is that a ton of the money is flowing into a smaller number of these massive mega funds. And you know what happens whenever that much cash starts piling up in one place? The regulators start paying very close attention. So we can definitely expect a lot more focus on things like fees, transparency, and making sure everything's above board. Okay, so we've run through all the hot trends, but let's pause for a second. With any investment, it all comes down to the fundamental trade-off, right? The relationship between risk and reward. And it's so important to understand that here. On the one hand, the benefits are pretty compelling. You can get real diversification away from the roller coaster of the stock market. You can get inflation protection from real assets, and you can tap into totally new ways to make a return. But on the flip side, the risks are just as real. Your money is often locked up for a long, long time. It can be tough to know exactly what you own, the fees are usually higher, and maybe the biggest risk of all, your success can completely depend on picking the right person to manage your money. So let's tie all this together. Why does the rise of this third sleeve of investing really matter? And not just for the super rich, but for pretty much everyone. This visual says it all. For the longest time, a portfolio was a simple two-slice pie, stocks and bonds. But that's being totally reimagined. As you can see, alternatives are carving out their own permanent space in that pie. It's fundamentally changing the way investors think about balancing risk and chasing returns. And that leaves us with one final and really important question to think about. As more and more of the economy's growth happens in these private markets, away from the public stock exchanges we all know, the question of who gets to participate becomes critical. As this new frontier of investing keeps expanding, who actually gets a chance to invest in the future? It's a question that is absolutely going to shape finance for years to come.